We like to make you money around here, and we do an effort every week to get Mark Lackey in here. He's the Vice President of CHF Capital Markets. And we've talked in the past about zinc, and Mark's joining us. And at the time, I believe, the prices are basically for zinc where they are now.
That's absolutely right, Pat. I think we're 1 cent higher at 84 cents today as opposed to 83 back in August. And we said at the time prices would go sideways this year, and we felt that prices would certainly increase significantly in the next 2 years. $1.20 at the end of 2014, $1.40 after 2015, and I actually did my 2016 number today, and I came up with about $1.60. So that's almost a doubling of the price in 3 years.
Okay, now against that background, what are the key drivers for that?
Okay, well, Pat, if we look at demand, we're getting rising demand on the housing markets worldwide. We're getting it in the non-residential markets and in automobiles. And the other area we're seeing some pretty significant growth is in fertilizer. You know, zinc is actually something, zinc deficient situations can lead to serious stomach problems. And so in the third world and in the growing worlds like China and India, it's a pretty significant issue. The Chinese are really pushing zinc in their fertilizer in order to improve people's health. And the other thing we're seeing right now, Pat, is that the inventory numbers are going down here. They're now at a 14-month low. That had the market worried earlier in the year when it was at like a 5-year high. But inventories are going down, and so on the demand side, it looks good. And the key, I think, Pat's on the supply side. We're going to see a 10% decline in mined zinc in the next 3 years. There's 10 mines closing. And the three biggest ones that everybody probably knows, Lachine in Ireland, Brunswick in New Brunswick, and Century in Australia. And these are all because these mines are literally mined out. It's got nothing to do with labor problems or political issues.
Okay, so now zinc production falls to the next layer, if you will, in the small caps out there.
Right.
And you've got three picks for us. Black Widow Resources.
Right. So I decided I'd pick an exploration play. I normally don't do that very often, but the management team here has had two major successes in the past. Noront, and they had a company called Spider Resources, so I guess they like arachnids, and they had that taken out by Cliffs. So these guys have had two big successes in Northern Ontario. They're now back. This is a relatively new company, only started trading recently. But I like their zinc potential. It's a very good VMS deposit.
I hear Northern Ontario, I go, whoop, whoop, whoop. This is the whole Ring of Fire debate.
No, yeah, their ex-projects were. But the zinc play that they've got now is more over in the Timmins Porcupine area. Okay. So this is not something people should be concerned about. It's a different situation if you are in the Ring of Fire, given what has taken place, absolutely. That's one of the reasons why maybe they had the foresight to sell out of the Ring of Fire. I don't think they could have known a few years ago what was going to transpire. But they've got themselves what I think is one of the interesting looking zinc plays. And the other thing, Pat, there's very few small zinc plays. I only follow 6 or 7. There's only about 10 or 11 that even trade on the Venture or on the TSX. So you're limited, and if you like the zinc market the way I do, then you're scrambling to find good opportunities.
And when those opportunities come along, you can make money. I think you had Zazu Metals the last time we were on.
Right, and I like this one, Pat, because this is a play in Alaska. They've got a joint venture partner, Teck Resources. Now, Teck has a mine up there, the Red Dog mine, which is one of the biggest in the world, and it's actually adjacent to Zazu's property. So what I see here is infrastructure's in place. You have the mining capability of Teck as a joint venture partner. That de-risks the project. It's not an area where anybody in the environmental community has a problem with. They're fine with the mining operations there. So these guys are now at the pre-feasibility stage. That would indicate to me production, near-term producer over the next few years, and a way, obviously, to leverage yourself to play the rising price of zinc.
And then the last one, Hudbay Mining.
Hudbay Mining,
people know that one.
Well, we put this one on in August, Pat, at $6.20. It's now trading $7.50. Oh. So you had a pretty nice lift if you happened to take our advice. I still think even at these levels, it's a very interesting entry point, given the fact that with zinc prices going where we think they're going, this is an excellent leverage play because it's a relatively low-cost producer, and almost all their production's in North America. A lot of it's in Manitoba, which, as we know, is a great jurisdiction with low electricity prices, unlike some places, and also a very solid workforce. And we just like the whole prospect for Hudbay over the next 2 or 3 years.
Yeah, so Black Widow is exploratory, Zazu is still preliminary.
Near-term producer.
Yeah,
and in Hudbay's case, so we've given you one of each. An explorer, a near-term producer, and an actual producer. So you make your own judgments on your own risk tolerance, for example.
See? Good call.
There we go, Pat.
Great to have you.
Great
next
to be
week,
here.
what are we looking at, Mark?
We're looking at copper probably next week.
Copper, the professor of economics.
Exactly.
Okay, Mark, thanks very much.
Great to be here.
Mark Lackey is the Executive Vice President of CHF Capital Markets, and he joins us every week around this time or so. We're going to take a break. When we come back, we're going to talk about a list that's out there, and there's one name that's missing. I think it's fascinating, and I don't have time to ask Barbara Walters, but we'll get the next best thing.